to another Targets in Focus from Dukascopy TV. Today I'm joined on the line from New Jersey by Kathy Lien, Director of Global Research and Analysis for GFT Forex. Kathy is a regular commentator on currencies to global media organisations, and today she's talking especially to Dukascopy TV. Thanks very much for joining me, Kathy. Let's start with the US dollar, Canadian dollar. This pair has been on the rise this week. What do you think are the main drivers behind this pair at the moment, and where do you see the dollar CAD heading in the 1, 6 and 12-month timeframes?
Oh, I think that the main driver behind the strength in the Canadian dollar is the rise in oil prices. I mean, overall, we've seen a pretty nice push higher in commodity prices in general, and that's kind of lent some general support in the CAD. With that in mind, however, I mean, the CAD or dollar CAD itself is still much higher than where it was 6 months ago, and I think that traders shouldn't lose sight of that because it indicates that even though the Canadian dollar will benefit from higher commodity prices, it's still considered a risk currency. And because it's considered a risk currency, it's very vulnerable to the developments in Europe. So to be a little bit more particular, we have seen some signs of weakness in the Canadian economy. And there's a very good possibility that the Bank of Canada could become one of the next central banks to lower interest rates. And so for that reason, I don't expect much recovery in the Canadian dollar. I think that 6 months forward, we'll probably see dollar CAD maybe trade closer to 104, 105.
Let's move on to the euro dollar now then. We've had a new cabinet formed in Italy today and developments in Greece, but at the same time the ECB appear to be back in the bond market trying to fight rising yields. Do you think we're about to enter a period of relatively greater stability or a period of continued crisis? And where do you see the euro dollar heading in the short, mid and long term?
Unfortunately, I think for the Eurozone, there's going to be more pain than gain for the euro. There's a lot of unanswered questions, and as we have seen in the bond market, the efforts so far in terms of the leadership changes and austerity measures that will probably be implemented in the near term have not been enough to satisfy investors and to alleviate their concerns about contagion. So I think there's a very realistic possibility that the Eurozone could fall into recession next year. And for that reason, I think that there's a good possibility that weaker economic reports that lead us to the negative GDP numbers that will show us recessionary conditions in the Eurozone will all weigh on the euro and drive it below 134, maybe even 133. For the most part, the European uncertainties will be the primary focus of the markets because as we've seen, the U.S. budget talks have impacted the dollar in the past, but even with the downgrade of the U.S.'s sovereign debt rating, people have not abandoned the U.S. dollar at all. They continue to buy U.S. dollars, and the latest Treasury International Capital Flow report shows that the dollar is still seen as the #1 safe haven in the market. So I think that even if the budget talks hit a snag, the greater risk right now and uncertainty still lies in Europe, and for that reason, I think the focus will still be on Europe.
Onto the dollar yen finally then. We saw the BOJ left policy rates unchanged this week, but do you think it's becoming more likely that further currency intervention is likely? And where do you see the dollar yen heading in the short, mid and long term?
Well, I think that further intervention is definitely something that all dollar yen traders should be on guard for because the Bank of Japan and the Ministry of Finance have increased their intervention war chest to the highest levels ever. So that means that they have a lot of money to spend, and they're going to be looking to spend it. Now, I think the magic number in dollar yen is somewhere between 76 and 76.50. Right now, we haven't seen intervention yet in dollar yen, even though the currency pair has moved back towards its pre-intervention levels. But I do think if we fall another 50 pips in the currency pair, the central bank will be hard-pressed to come back into the markets. So for the most part, I think that there's more upside than downside risk in dollar yen.
Okay, thank you very much for that, Kathy. That's all we've got time for, but as always, stay tuned to Dukascopy TV where we'll have more Targets in Focus.